Hello everyone. I hope everyone is enjoying their shorter week and got to take advantage of the 3-day weekend, got outside, got some sun, didn't think about the market too much, and is ready for next week with our first full week back after our little break. Sellers have definitely been in control this week. We have some new areas, or past areas, new as in we haven't seen them in about a month or so, to review. Some pathing. The red kind of pathing line on the chart right now is what was presented in the newsletter this week for our newsletter subscribers. And today, Thursday's close has closed in a pretty important area, a pretty important kind of directional area. We'll go take a look at our daily chart with our 20 DMA envelopes as well at the end here to kind of go over some structural pressures as well as mean reversion ideas. But let's start on the chart as we see it, kind of review this week so far, and review kind of what we're looking at structure-wise. So with Tuesday's open here, right back into our previous all-time highs, into this strong balance that we built out through the last handful of weeks. Lower high, after our look above fail, look below, and gap fail, which we talked about last Thursday, we came and saw a strong retest and sellers in a bit of a channel down here taking control. Now, pivots have not really shifted too much from what we discussed last week. I still like relying on this 52.95 as an immediate pivot, as well as 05. Obviously, we've traded away from there, but still, any bullish action tomorrow on Friday or early next week, Monday, Tuesday, this area is still in high contention. We saw today, as we've looked underneath our gap fill in 74, that it became a quite strong resistance. We did see buy side pressure here, attempt to bid up and over earlier in the morning, but they got stuffed quite hard, and we have traded down into our last kind of major bounce area before this strong breakout, which is where we saw our close today as well at 45. Now, this area is quite important structurally and with this bounce. We do have a bounce sitting below with 52.10 being your continuation target. Very similar structure to this look down, look away. If we're continuing bearish tomorrow, expect to trade towards 30, lower high, and seeing this 10 tagged. We spent just about 3 days in this area and 3 days in our current 45 area here. So acceptance down here and balance, if this can be a larger degree higher low, on our daily chart, which we'll go look, this can still rotate very nicely to the high. We can balance here and build out this double distribution into a single as well. But understand, this area was important to build out prior to our breakout, so we need to really check and watch closely if we're still responsive in these two nodes. Like I said just a little bit ago, pivots haven't really changed. I'm not going to spend too much time on them. 52.10, so you look below this 45 with our node edge down through 38 to 40 is of importance. Upside, things have not shifted. 74, still interested for initially for the gap fill. We have seen the flip today. We saw a lot of positive deltas into this high, so people still have interest in attempting to buy up here. Obviously today they got stuffed, but keep an eye on that. Your 95 to 305 as your primary pivot. I prefer this 305. We have really good node structure here, so can we look back up and accept into this node, or do we reject lower at 95 and then continue to look down? For sellers here, as we talked about our kind of like lower targets for continuation, I do believe it's going to be important to keep this 60 through kind of 70 zone. We can see here a little balance as resistance. So if we see this offer move down and can't even get back above 70, that'll be quite strong off the 60 and what was kind of anticipated for this week. in terms of areas of resistance kind of shifting down. That's going to be your most immediate look. So keep an eye on that. This might not apply and we'll still rely on the 74 in most current structure, but worth noting, worth paying attention to. Let's quick run over to our daily chart and we'll zoom this in. So basic return to mean here, back to our 20 DMA and with a look below. If we remember some of those areas we just talked about, 2010 is this node here. And we talked about spending some time and filling this in. That would be completely acceptable. You can see our past balance in this area on our sell down, as well as our balance that we just discussed that built up the structure on our push up. So a lot of value here. We can see it based on our 20 DMA in terms of a mean as well, but very balanced auctions in this area with, if we even pull back and look through February, failed auctions above. We'll see if this fails or accepts. Lot of balance in this area, and then failures below need to look for liquidity. So this is a pretty important area. It's fine in terms of right now for mean reversion, but we need to see, can we accept and look back up, or does this full auction fail? And I would expect a larger degree trade down, and then ultimately looking back under. I don't have too much for you guys. We can really quick go and take a look at our good friend NVIDIA here. Let's just focus on our daily chart here. So obviously very strong off earnings with a big gap and then a subsequent gap above. If market gets bearish and this starts to sell, we have potential for an island here. I would expect this to get cleaned eventually, but a look down towards this 1,000, 1,020, and then a bid back up can definitely push the market. The last thing we want to go look at is our Mag 7. What is it? The Mags. There we go. We can see a lot of pressure as we've had weakness in Microsoft and Apple, as well as Tesla kind of over these days, that a lot of this first initial pressure this week, as well as last week, has been NVIDIA. So this does have room to come back down. Once again, this is just your Magnificent 7 index, so very tech heavy. And right now we're seeing NVIDIA be the most pressure in this. We just took a peek at the chart, but a retest of this down back towards 40 should be watched and should not kind of be ignored. The last little thing when we do across the market, we look at our regional banks. Very strong today, after quite a weak month of May. Back down into areas where we saw bids as well. Watch this for Russell pressure. And that can be our final quick look. We go over to the Russell. I'm going to turn off our envelopes. And we've spoken quite a bit about this 2120 and acceptance into this yearly value break. See, we're still rejecting daily chart here, and we're trading back down into our most immediate pivot of this kind of like 2020 area, 2030, before a good node structure below. So everything is kind of resting back on a balance, back on an area of interest, and we need to see, can we accept back above, put in a higher low on these higher time frames, and accept our auctions above, or do we fail and see these larger degree oscillations that have traded before? I'm quite directionally agnostic here. There's not a great read if we're going to look back up or look back down, in my opinion, at least for how I view things. We're taking it on a day-to-day basis and understanding pressures around these auctions. And we have big node structure on both ESNQ and RTY, where if we accept back in, we can look short down through the edges. If we accept above, I'll be comfortable in longs. Not really kind of planning anything else outside of that. So that's all I got for you guys. Pretty quick and dirty. Not too much stuff has changed. I know I just basically say that every week, and you're probably like, this is confusing. It's not quick. It's not clean. But feel free to ask questions. Tune into our live streams throughout the day as we kind of navigate them. They are free on YouTube. If you want further information on our newsletter as well as Discord server, please reach out. But that's all I got. Enjoy the rest of your week, and I will see you guys next week. Goodbye.